Good morning to everybody. First of all, today we'd like to pay attention on continuing tendencies in the stock markets, where another one we have a kind of big drop. Yesterday the Dow Jones was down around 4%, and today the Nikkei in the morning is below 2% falling. That means that the impact of such turbulences of the stock market on the foreign exchange should increase, which we can see on the safe haven currencies, which is in strong demand at the moment, like Swiss franc and dollar yen and yen on the crosses as well. Euro yen fell below 133. And what about other currencies? They are also under the downside pressure because of the continuing rising risk aversion environment around the global financial markets. That, of course, should not bode well for the foreign exchange, which should continue to be under increasing volatility pressure. And of course, in such an environment, it's a little bit problematic to trade correctly and to make profits on each kind of trade. So regarding today's analysis, we'd like to pay attention that we rebought our long position in Australian dollar this morning because we still expect that maybe during today the market will rebound. The stock market, and that should support the commodity block currencies as well, because of the continuing falling of the stock prices. Also, some other assets are under increasing selling pressure, like commodity prices, and you can see that Brent oil is below 65, which we suggest as a good correction from the highs of above 70. Dollar yen, we still intend to sell the currency on a possible retest of the short-term downtrend, which lies today around 109.75 with a stop above 110.50. We still expect that the support line around 38.40 in the cable should prop up the currency higher from here, also taking into account the hawkish statement of the Bank of England from yesterday. The euro sterling as well should remain in the kind of wide range between 87 and 90, and while inside of that range we consider the pay neutrally. New Zealand dollar, we wait for the possible retest of the moving average 200 daily line, which lies today in the kiwi. Let's see, which lies today in the kiwi around 71.46. A possible test of this line should give us an opportunity to enter a new long position, because we still consider the current slump as just a kind of correction before the United States currency will eventually resume its major downturn. Dollar Swiss, here also we are waiting for an uptick to 95.30 to re-enter a short position. Regarding other pairs, for example, what else? The dollar Canada, we increased the position at 129 at 125.90. Now it's an average we have around 125.67. We put a stop, a very close one, above 126.25. Probably a mistaken one, but anyway it's still safe, and we still short. Let's see the dollar Canada chart. We can explain you why we put such kind of stop loss, which is low of December around 26.23. That's why we put a stop at 26.25. we still expect the pair sooner or later will resume its major trend down, because from the point of view of longer term consideration, the pair still below its moving average 200 daily line, which intersects today at 127.59, and also below a longer term downtrend, which is far away from here, around 32.70. That's all for the moment. Today is Friday, it's closing of the week, so we revert your attention on the possible implications of the current financial turbulences in the stock market. Pay your attention on this. We wish you a nice day ahead and a nice weekend. Hope that you will be with us again next Monday, and if you have any suggestion or kind of question, don't hesitate to call us anytime. Bye bye for now. See you later.